South Korea's corporate crypto shift, what it changes and what it doesn't. Welcome back to TradeX Rank. Today's update is about a policy shift in South Korea that could widen crypto access for listed companies and professional investors, often described as ending a long-standing restriction, with reports also pointing to an allocation limit around 5% of equity capital. This is not just a more demand headline, it's a market structure story. Here's what it can change. First, the buyer base. Corporate and professional allocations tend to be slower and more governed. They don't usually chase every candle. They often build exposure in steps inside policy limits. That can make capital stickier than short-term speculation, especially during normal volatility. Second, the quality of infrastructure. Institutions typically force better processes, custody standards, reporting discipline, and clearer compliance workflows. Over time, that raises the baseline for how exchanges and service providers operate, which can improve the overall plumbing of the market. Now here's what it might not change quickly. So what should be watched next? Look at spreads and depth in the local market. Watch whether liquidity holds up during volatility. And pay attention to whether participation broadens beyond the most liquid majors once the rules are actually in place. That's the TradeX Rank lens. Focus on structural signals, not just headlines.